After a nice rally last week, the markets closed slightly lower as we are seeing some choppy rebalancing action. We could not bid higher into the overnight high on the ES, while we chopped around mostly in Friday's range. We saw that the real yields increased today, which led to a rotation into defensive such as utilities, healthcare, but consumer staples was relatively weak. Energy was quite strong as well as inflation fears outweighed recession fears. Discretionary tech and financials were rather weak as well, as they are the worst performers in the late cycle generally. We have quite a busy week with many events going on. We had a G7 meeting today with some central bankers and finance ministers from Canada, Italy, France, Germany, Japan, US, and the UK. And we also have some important information such as the core PCE, which is a very key metric that the Fed uses, as well as the quarter one GDP number. I think regardless if the CPI also pulls back, the Fed will still be aggressive against their fight against inflation as long as they're way above the neutral rate. There really isn't any reason to be lowering rates or QE anytime soon, or even pause as many are hoping, when inflation is running hot and they must induce a recession in order to cool inflation, which is getting more likely. The main driver of inflation currently is oil, which increases producer costs due to transportation and shipping, which drives up the prices of materials and equipment, and in turn the producers will have to transfer that inflation to the consumer. The only way to bring inflation down is to see oil much lower, rather whether it's destroying the demand with a deep recession or a solution to this oil crisis due to supply chain constraints as well as the Ukraine war. Oil is currently bidding higher today as it closed near $110. Likely, the sell-off last week in oil was due to the end of quarter rebalancing and speculators getting taken out. The core PCE also is much more important than the CPI, as it is used by the Fed as a key inflation number. The PCE calculates prices that consumers pay, excluding food and energy nationwide, versus the CPI, which only does urban households. Also, with the GDP coming in this week, it is important to see whether or not we are deeply negative, or which then the bottom will not be in. But if the number is rather slightly negative or mild, then we could see this as peak fear being behind us, and this should signal a potential buy. If you pay attention to the FinTwit space or any social media space, you see all these self-proclaimed gurus who are quite full of it, and I would say they're quite prime examples of Dunning-Kruger as also, we have the 4th of July weekend coming up, as generally speaking, we may see a rally or rather choppy conditions going into that, so expect liquidity to be quite horrid. If it's not horrid, if it's not horrid already. Now, if you look at copper, we are seeing a slowdown in growth, and historically, copper prices cratering generally leads to recession in the past. If you look at the past 30 years. We also see that many retailers are stuck with a lot of discretionary inventory for the pandemic growth, which led to a flurry of buying. But now they are stuck with all this inventory and demand is slowing down, so they have to unload all these items that people don't want to buy or cannot afford to buy because of high cost of living, and they have to unload it for cheap. So, but this won't bring down inflation really, as it is still a supply issue. Also, what's very interesting is the U.S. Atlanta Fed GDP now is revised to 0.3 versus 0%, which is quite interesting. Perhaps people are thinking that we may see the Fed slow down in their rate hikes due to perhaps the PCE coming in or any other inflation metric. But this is quite premature as there is a big question coming into the inflation data and also the GDP this week. So I would not be quite hopeful yet. But it is quite interesting that we saw this number get revised, and generally speaking, it is accurate. It was accurate pre-pandemic, but the question is whether or not this what is the actual GDP number is going to be now. As if we look at quarter one, we did miss very big in many economic predictors. But anyways, with that being said, I want to thank you all for watching. Be sure to check out the links in the description for more updates, and have a nice night.